Hey, I'm Pookie, and you're you. Today we're going to learn how to actually trade. Hi there, it's Pookie's Revenge. Welcome back. This is episode 10, and I want to dig into the more specific aspects of how to manage the portfolio beyond just dividends and tax advantages and stuff like that. So let's go ahead and dig in. I'll get my face out of the way. And you'll see here I have Webull up, but more importantly, I want to show you Miro. So this is a flowchart for the whole process, right? So the other flowcharts that I've put out are relatively step-by-step. It just kind of shows you the concepts, right? It's, you're going to put 70% in investments, 30% in speculative amounts, 33% per day, and then it, just kind of gets a little vague from there, right? So we're going to fix that today, and I'm going to walk through what specifically is going to occur within that 30%. So first, it always starts with consistent contributions. Any investment strategy should involve consistent contributions so that you can speed up the passive compounding gains. So let's just say for right now, since it's the month of October, we're on our second contribution. The portfolio amount should be, $1,000 roughly. I put in an extra $200 because we had some yard sale proceeds. So obviously we went through the $700 piece of it where we're taking 70% of the portfolio amount and we're splitting it up between dividend stocks in relatively equal positions. Now I am offset a little bit because of the strategy that I'm putting into place. So I don't necessarily want to just put $100 max into each one because some of the ones that I want are over $100, and that's okay because I understand this going into the strategy. But if you're someone who's brand new, doesn't understand how to prioritize dividends and stuff like that, you can just break them up into equal positions. And if you can't afford the one that you want, you can always just wait until a later contribution. So those inevitably lead to dividend payouts, which you can reinvest. Okay, the P&L unrealized of the shares is kind of irrelevant until you sell it. So if the stock goes down, it's okay, right? Because ideally we've looked into these, they've got good growth potential, and they're going to go up over time. We don't really want to get lost in the noise. So we can just kind of DCA these a little bit. All right. And, once you do realize that if you have to sell something, for example, short term, you can still just use that as your tax advantage, right? Because we know that every sale that we make that's a loss, as long as we don't re-enter within 30 days, we get that wash sale non-applicable status, so we can just claim it on our taxes and get 100% of it back towards our refund. In a roundabout way, right? It deducts from your income and capital gains burden, so can't just say it's added part of your refund. It just makes your refund bigger because your deductions elsewhere are offset a little bit greater. So let's take a look at that $300, that 30% that I really need to elaborate on. So if I've got $1,000, 30% of that is $300, okay? Which means I can use $100 per day. If I'm in a cash account and I want to roll the funds, I need to use a max of 33% per day. Otherwise, I won't have settled funds, and I'll have to skip trading days and stuff like that. So let's just, for the sake of keeping it simple, I'm going to use up to 33% per day, which is $100. Let's say I want to do 5 trades per day. That's reasonable. You don't want to do 50 trades per day. A, your accountant's probably going to choke you out, and B, it's just too much, right? You're not going to find that many good opportunities that we really, really like. And your positions aren't going to be big enough to really be meaningful. I mean, they're small enough as is, but it's proportional to the account. So in this example, 5 trades per day from $100 is $20 per trade, up to 5 trades per day, and that's using that 33% per day, okay? So let's break that $20 up. So here we have a diagram of the trade sizes. We have the outcomes, right? If we're using a 1 to 2 risk reward, it's either going to be a 40-cent win or a 20-cent loss. Okay, and that's minimum, right? You can, in theory, let the profits breathe, and you can get more than 40 cents. But for the sake of just locking it in right now, if we're new, 40 cents is the hard cutoff for profits. You're going to lock it in. It's twice the size of the losses, and the losses will always be the same size. And that's the beautiful part. Your profits have unlimited potential, but your losses will always be the same size. That's really what we want to strive for. Okay, and if we're taking $20 per trade, that means that we automatically can't trade anything over $20, which means this 20 cent is 0.1 cents risk on this $20 position. So easy peasy, right? It's all percentage based. We can scale this up infinitely. It's a $50 position. We got a 50 cent max risk. I don't like that. I still want to keep it at 20 cents. So Easy peasy, right? We just buy more shares, we get a bigger profit. All right. So invariably, we're going to have 6 specific outcomes if we do this, right? With 5 trades, you have 6 specific outcomes. If we win all 5 trades, we get a $2 profit for the day. Okay. If we win 4 trades and lose one, that's 4 times 40 cents minus 20 cents is $1.40. If we win 3, we get 80 cents. If we win 2, we get 20 cents. If we win 1, we get negative 40 cents. So we take a 40-cent loss. And then if we lose all 5, that's 5 times 20 cents. That's $1 loss for the day. Okay. And you're thinking, oh, that sucks. It's only, if there's 22 trading days in a month, that's only $22 losses and $44 profit. But let's go ahead and use that, right? If you're taking $22 a month in realized losses, that means you're losing every single trade all day, every day, which is okay, right? This is the worst case scenario. You lose $22 a month. That's 2.2% of the $1,000. That's okay. That's built-in risk management. Okay. We can use that because, 22 times 12 is less than 3,000. So we can use that, right? That's tax advantage as long as we don't keep re-entering the same stocks. However, if we win and we get, let's say, $2 per day, which is pretty common, you're going to exceed the 40 cent per trade when you learn how to let things breathe. But for right now, let's just say you get $2, or maybe you get 80 cents, right? You multiply that by 22. That's your profits for the month, and that's okay, right? It doesn't have to be a huge number because the bulk of your growth over time is going to come from these dividends and reinvestments, okay? So this is just to help you prioritize learning how to trade speculatively and things like that. And you can incorporate options and things like that later on. But for right now, if you're just learning how to trade, this is where it's at. It's very simple. It's very low risk, low stress. It's a lot easier to manage emotions on $20 than it is on $1,000. And if you're consistently throwing your money at something like SPY and losing it, you're just starting over every month. This allows you to keep 100% minus 2.2%. So you're keeping 97.8% of your portfolio, even if you lose every single trade all month long. Okay. And it's growing because you're still getting the dividends to offset those losses. Now, it's not going to be outperforming your losses, but it's going to be offsetting them, which is pretty cool. All right. So once you get these profits, which you will inevitably get profits if you follow this strictly, you can use those to reinvest and buy more dividends. Right? You can just keep growing that investment allocation to get more dividends. Use those to buy more shares, and it's a vicious cycle. It's awesome. It compounds nicely. At tax time, you can claim all these losses as long as you don't violate the wash sale rule and the circumstances apply. And again, I can't provide financial advice legally. I can't give you tax advice, so always seek out the assistance of a locally licensed tax professional. I'm going to say that in every single video until you guys get sick of me. But it's important. But when you, if this applies to you, you can take that realized loss and you can claim it against your income and against your capital gains burden and offset and get a bigger refund. Then you take that refund and put a chunk of it back into your investments. So you literally just recycle the same dollars as long as you use them intelligently. And you can try again and again and again, year after year with the same dollars, right? Until they turn into wins, okay? And then you just reinvest them. So ultimately, this bottom section here, the speculative section, is just a filter. You're just using it as a machine to potentially win profits over longer periods of time on the same dollars. And then you're just converting them, once they've passed this filter, into investments. Otherwise, you're just putting them right back in the same filter, okay? So hopefully that makes sense. They're not separate processes. If you follow a dollar all the way through this, you either come out with a win or a loss. Okay. If it's a loss, you get it back at taxes. You put it right back in. Lather, rinse, repeat until it becomes a win. And then it goes right up here into your investments. And it just grows and grows and grows. So that's a pretty cool trick. We just have to understand all the rules that we can play with. So let's look at the actual trades, right? So if I'm using a $20 position, I know for a fact I need to trade something that's $20 or less, okay? And if I draw a box here, this is a box that's 20 cents in size, okay? So this is my max risk. So anytime I look for a setup, it needs to fit inside this box, okay? And what I personally prefer to do is I look to see higher highs and higher lows. And a high is just a candle that has 2 candles to the left, 2 candles to the right, which don't exceed the high of the current candle, okay? So this is a validated high right here because these 2 candles are lower and these 2 candles are lower. And I'm just looking at the top of this wick, this little peak right here at 974, okay? So that is a validated high. This down here is a validated low, and if they're ever side by side, I just use the next one, right? I use the latest one because that's the last time the price was at that level. This is a validated high right here. It's lower than this one, so that's a lower high. So I can't use that because I like to look for higher high, then higher low, then an engulfing, okay? Or a trend line break and then an engulfing, or a moving average crossover and then an engulfing. RSI divergence break, 50 RSI, then an engulfing, okay? Ultimately, that engulfing is going to be what sets my trade up for me, because that shows a specific micro scale change in trend from from bears to bulls. Okay, but more importantly, it gives me defined risk. So if this is my risk, if I'm only risking one candle, and this is the criteria, okay, if I see these two candles side by side, let's say we got a wick on one of these. I'll have to move that over a little bit. It's a little bit skinnier than I wanted. Let's say this one has a wick, this one doesn't. My entry would be 1 cent above this guy. So 1 cent above that, there's my entry. Here's my risk, 1 cent below the lower of the two candles. Okay, and this is one of the oldest tricks in the books. It's very easy to do. It's easy to identify. And more importantly, as long as this range right here is less than that 20 cent max risk that I prefer to take, I can take this trade. As long as it fits the trend and I see this engulfing setup. So let's say this is a red candle and this is a green candle, or in my case, it's white because I'm using a different color scheme, but it's negligible, right? Just move that over a little bit. So this is my stop loss right here, guaranteed no matter what. Okay, this is my entry, and then I'm guaranteeing myself no more than 20 cents risk per trade. That puts me right in the realm of obeying this system. Okay, so I can do that however I want. Okay, and if this seems a little complicated, it's okay. We do have education in the PB Discord, so if you guys aren't familiar with that, if you're from outside, the links are in the description of this video. Otherwise, if you're watching this as a member, you guys probably already know what I'm talking about because I go over this a lot on my streams. So this is one of the simplest ways to identify confirmations and stuff. So, all right, so here's the engulfing, and I'm looking at it from a trend perspective. I want to see a higher high, then a higher low, and they have to be validated. And then I look for this engulfing. And this risk range right here, I'm just going to double that. Okay, so I'm going to do 1. And then 2, okay? And that, by default, gives me a take profit range where I can lock those profits, okay? And once I do that, I'm guaranteeing myself a disproportionate profit to risk. So in this case, that puts me in the green box right here. For one of these $20 trades, it's a 40-cent profit guaranteed. As soon as it hits that level, I can lock it in, okay? And if I win half and I lose half, I'm net positive, because my wins are twice the size of my losses. So it's just logical, right? And it, that allows me to lose like 2 out of every 3 trades roughly, or something similar to that, and I'll still be net positive. But if I lose every single trade, it's okay, because my max loss per month on this is still only $22. That's if I lose every single trade. That's 110 trades if I'm doing 5 trades per day, $20 per trade, and 22 trading days a month. Okay, so easy peasy. Am I going to lose all 110? I doubt it. That's statistically improbable. But I'm giving myself pretty good odds here to win anyway. So it's going to be pretty hard to do that and lose consistently 110 times in a row. And if that's the case, something is wrong with the market, I think. And we can just adapt the strategy. Ideally, we're reviewing our criteria every week or so. But let's go ahead and look. Right, we've got this pattern, this engulfing pattern right here. Okay, this candle breaks over the the opening price of this candle, and we've got a defined risk, and it's less than 20 cents. So this would be an entry, but it doesn't fit the trend, right? Because we're seeing lower low, lower high, and then it kind of pushes down here. I want to see the higher high, higher low. So all I have to do is just look through, right? And I can even draw a line here, a vertical line, horizontal line. And I could just move these down as I see these highs and lows develop. So here's a validated low right here. So that's a lower low, right? We got lower lows, lower highs, all that good stuff. We got a lower high right here. Does that validate? Let's see, what's that? 970. Nope, so this doesn't validate because these are all 970. This candle, this candle, this candle. This one is higher, so that's a higher high because it's higher than the most recent validated one right here. Okay, and then we've got boom, boom. That's a higher low right there that validated. So after this, I want to start looking for this pattern, okay? So I'll walk you through it again. Lower low, lower high, lower low, lower high, lower low, higher, higher low. And this candle forming validates this candle as the validated higher low because 2 candles to the right, 2 candles to the left are higher than this candle's low. Therefore, it's a validated higher low, okay? So it's just pattern and shape recognition at this point. All right, so now you can see that we're forming a higher high, and this right here validates this is a higher high. All right, so now I'm just going to look to see if any of these candles give me what I want. So this guy right here at one point, if we just look back, you can see this wick right here. This was at one point a higher high. I'm sorry, a higher price than the open of this candle. All right, so that means that I could take an entry right there. So let's go ahead and just plot that. I don't really care about winning or losing or, you know, being right 100% of the time. I'm more concerned with finding the appropriate setups and setting them up correctly. So in this case, if I'm looking at the OHLC right here on this candle right here, okay, the opening price was 967, which means the entry price would be 968. It's 1 cent above the open of the previous candle that gets engulfed. Okay, so it's 968. The low is the lower, or I'm sorry, the stop loss is the lower of these 2 candles minus 1 cent. So this is 965. This is 964. Therefore, the stop loss would be 963. Okay, and I'm just going to fast forward here a little bit. So this is a 5 cent risk, which means we need a 10 cent profit. Okay, so 968, 978 would be the profit here. You can see it's a 2-to-1 ratio. So this one did hit, and it also stopped. I don't know which one of these was hit first. I could look at the lower time frame, and we can kind of dig through that and all that good stuff. But let's just assume it was a loss, right? Because we're in the habit of, yeah, it looks like it was a loss. Okay, so kick it back up to the 5-minute. All right. So in this case, all right, we've taken 1 trade so far with the best possible advantage, and it just happened to be a loss. So this one right here, 20 cents for a loss. Okay, so for the day's P&L, we'd be down 20 cents. All right, so let's keep looking, right? Because there's other opportunities here. And you can overlap the trades if you want. Like you could take this one here, but I don't prefer to do that. I just want to look for lower ones if possible. I'm not going to take an engulfing entry above where I already have a position, and I'm just going to let it play out. So it looks like it ended right here. Okay, so let's just keep looking. All right. And you know, this one right here fits, right? It's greater than 20 cents. I'm sorry, it's less than 20 cents risk, and it is an engulf right here, and it's after what we already had. You can also combine these candles if you wanted. I just don't like this particular setup, but it would be over the break of this candle here with a max risk here. You know, that would have won, but for the sake of backtesting with integrity, you know, and keeping things very specific, it's important to understand we're always going to have more opportunities, so we don't have to try to force things. But in this case, this is something I would have traded. So let's go ahead and look at this one, right? Again, just for the sake of doing it, okay? So this one here, stop loss be 1 cent below that. I'm just going to roughly put this in place. Let me just go over here and adjust that to make sure that it's at that 2-to-1. Unfortunately, I have to see that number because I'm too lazy to do math in my head. So this one would have won. And once you hit this 2-to-1, I'm sorry, the 1-to-2 profit, you can always just move your stop loss up right below that level. And then if that's the case, if it keeps going, that's great. If it's like a big candle like this, if it falls back down, you just hit your stop loss right under that 1-to-2 ratio, and you still make that profit roughly. So you're, you know, 38 cents instead of 40 cents. But in this case, you know, it would have gone a little higher. And what I'm really looking for is when these higher lows validate, you know, that's when you can move your stop loss up and stuff like that if you didn't lock profit. So that's a little bit more advanced, though. It's when you get into the you know, the letting profits breathe and having a little more experience and stuff like that. But you can see for 2 trades, this ain't bad, right? We took a 20 cent loss, 40 cent win. So we're net positive 20 cents for the day, which puts us in, oh, that should be a plus sign, right? We're in this range at all times, right? We're never going to go below a dollar loss unless something gets halted on the way down or something abnormal happens. But we could always go over $2 in profits if we let something breathe appropriately. So for right now, let's just go ahead and keep looking. So I'll minimize the size of this because it hit target right there. Okay, but you can see we're just looking for the same thing, and you can see the risk on this was 9 cents. That's less than 20 cents, so I could do that all day long. Next opportunity is right here, so let's go ahead and plot it out. And, you know, I haven't back tested this. I just looked at a couple tickers, and I just grabbed ones, and I'm just going back in time to you know, draw it out. I do this all the time in the Discord, so you guys can just give me tickers, and I'll do the same thing here. So entry price is $9.98. Stop loss here is $9.87, so that's 11 cents. So let's go ahead and add that. That would be $10.09, and then I gotta obviously add, you know, 10 more cents, or I'm sorry, 11 cents to that. So 10.20 would be the take profit there. Okay, so in this case, we have a 1 to 2 risk reward. So let's go ahead and see if it plays out. And I don't care if it has some noise and goes up and down, as long as it's going to hit the stop loss or it's going to hit the profit, right? Doesn't matter what else happens on the way. I'm only interested in this, okay? So in this case, third trade of the day, profitable, another 40 cents. So we're up to 60 cents plus for the day, okay? And then we get another guy right here. So let's go ahead and just draw it out. All right, doesn't have to be super complicated. We're just making it nice and easy for ourselves. Just going to move that stop loss down a little bit. Now, this is a pretty small one. It's a pretty small risk. So 7 cents. So then we got to add 14 cents to 1035, which is 10.49, I think. Oop, not it's going to be 10.49. There we go. So 1 to 2 risk reward. In this case, we hit it. It was pretty tight. And that's okay, right? Fourth trade for the day, 14 cents up. So let's go ahead and add the P&L here. So we've got, let me see what that risk was. That was 9 cents. Or I'm sorry. I apologize. That was a profit. So let's look at the losses here. 5 cent loss. Okay. Then we've got an 18 cent win. So let me put this in Notepad really quick. All right. Trade number 1. And of course, if we're re-entering the same stock, we're losing the tax advantage for the 5 cent loss, and that's okay, right? This is just for demonstration purposes. Ideally, you want to rotate tickers and stuff. But if the loss is small and you don't really care about it, that's okay too. I'm just doing it all in the same ticker because it makes sense. But ideally, you'd go from ticker to ticker to ticker. Okay, so trade 1 was a 5 cent loss. Trade number 2, I'm just going to plot these out here. 3, 4, 5, right? Because we're only allowing ourselves 5 trades for the day and $20 each. Okay, so trade number 2 was an 18 cent profit. Okay, I'm just using the same exact criteria here. There's nothing complicated. Trade number 3 here was a 22 cent profit. Okay, and then we got to look for trade 4, which is right here. Okay, trade 4 was a 14 cent profit. All right, and then we get one more trade coming. So let's go ahead and find, you know, again, this is an opportunity where you could combine these white candles here, and that would count. But I like this one better. So let's go ahead and just make that a nice clean one. All right, and we'll make that a super tiny loss, or stop loss risk. All right, 1047.42, so that's a 1057 take profit. I'm just doubling the entry to stop loss distance, and that's 5 cents, so 10 cents profit. And there we go, we hit it. So 10 cent was trade number 5. All right, so let's add these up. Right, let's see where we're at for the day. On our $100 that we invested for the day across 5 trades, we've got minus 5 cents, plus 0.18, plus 22 cents, plus 14 cents, plus 10 cents. That's 59 cents for the day, right? And granted, these are relatively tight because we're looking ideally for 40 cents and all that good stuff, but the max risk and max profit should be within negative $1 and positive $2, right? So for the day, on this one stock, of course, you'd, again, jump around from a reasonable set of tickers, not just jump around to random ones, but you'd ideally have a watch list set up. We're net positive 59 cents for the day. And, you know, they're like, oh, that might, you know, that sucks. That's not a lot of money. But think of it this way. We took 5 trades, okay? Every single one of these, with the exception of the last one, was almost 3 times the size of this one loss. Okay, even though we're using a 1 to 2 ratio, this is much more efficient as far as P&L as a ratio than it is, you know, strictly doing $2, $1, $2, $1. And also keep in mind that you didn't have to ever leave any of these lower trades, because what you did here, if we expand this out, okay, what you did here, let me just draw this all the way over here, okay? And I'll put that right back where it was. And I'll bring this up here. 1060. All right, what you've done is you've identified two areas. Okay, one was a loss, an immediate loss of 5 cents. The other one was a profit of, in this case, 72 cents. But what you would have done when you see these highs and lows forming, when you get these higher lows, you just move your stop loss up. So that's a higher low, that's a higher low, that's a higher low, and then you would have stopped right here. So this would have been your eventual stop loss if you're one of the more experienced traders and you just wanted to lock those profits in. So 49-cent profit. So you still come really close to that 59-cent overall profit, but only on 2 trades, which means you still have 3 trades left. Okay? And that's why I choose to trade things that have the higher high, higher low, and then I look for engulfs. Once I get a winner, in theory, that trend typically just keeps going, and then I don't have to, try to re-enter that position. All I have to do is move my stops up. All right? Because if you get a trend reversal and it's going to go, it's going to go. You don't have to sit there and, jump in and out, jump in and out. Okay? So that's the plan. Okay? It's not super complicated. It is very effective, but it doesn't have to be super complex. It's just a matter of combining portfolio management, financial management, obviously to make the consistent contributions, leverage the tax advantages, and reinvest the stuff, as well as a little tiny piece of technical analysis, a huge piece of trading psychology, right? Because new trader is going to be very difficult to, this will be very difficult for a new trader to follow consistently, and that's the goal. And that's why we limit these trades to $20 so that you're not blowing up your account trying to figure it out, okay? Once you're a more seasoned trader, yeah, let those profits open up. Just do this, follow your higher lows and all that good stuff. But if you're new, you can absolutely just cut those right there when it's a hard cut. And even if you wanted to, just max risk 20 cents here and 40 cents here, you would have got that. You wouldn't have taken a 20-cent loss here, maybe. Well, yeah, you would have. Let's drag that down. I'm sorry, that was a bold claim. That's 20 cents. No. So in this case, you wouldn't have. Right? So if we just drag this up to 40 cents. All right, so strict 20-cent risk, 40-cent reward. In this case, you would have absolutely made a profit on that. You would have had 2 winning trades, and then you could have looked for a third if you wanted to. But you don't want to do that on every single trade. And why does it, it doesn't really make sense to. If you see a setup and you see a max risk, a defined risk that's less than 20 cents, why wouldn't you take that less risk? That smaller risk, I'm sorry. Can't talk today. All right, so this is the plan that I follow. This is the one I'll be using for this smaller account. Now, I did trade some options just to kind of boost the tax advantage a little bit. And I do have a couple different dividends now because I had that extra contribution from the garage sale proceeds and stuff like that, but the concepts are exactly the same. It doesn't matter what size account I'm trading, it's always percentages, and the sooner you learn how to focus on those percentages and obey your risk and obey your profits, and get yourself out of your own way, the better off your trading will be long term. Okay, so let's trade safe, let's be smart, let's use the advantages we have, and that is just the fact that myself and other traders like me that have kind of been through the ringer and already paid the market a bunch of money and time to figure this stuff out, am able to walk you through this. I didn't have someone like that. So my mentor was very limited. So I hope you guys take full advantage of this. Make sure you guys hit the subscribe and like button. I'm not like begging for likes or anything. I just want to make sure that you guys get the notifications when they pop up, because these postings are a little bit sporadic just because of my schedule. But yeah, I want to make sure you guys don't miss anything. So with that said, I'm going to end this stream here. Thank you all, and I hope you enjoy your weekend. I got the watch list I got to do here in a little bit, and we'll get that out for you guys tonight. So thank you, and goodbye.